Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. Welcome, folks, to We Build Great Apartment Communities, the only show where we discuss the strategies and tactics from converting apartments to amazing communities. Welcome to the show. I have here a great guest. Sterling Chapman is here with me. Sterling, how are you, man?
Doing great. Thanks, John. Appreciate you having me on.
Awesome. So, hey, I really love your background. So I'm going to share your background with our audience so that they have a sense for who you are, right? They can connect with you, and we want to bring them into the conversation, with us. So Sterling, very interesting background. For one, you got to love a guy that loves barbecue. He's a barbecue enthusiast. Right there, man, is an A+ in my book, man. Barbecue enthusiast, A+. Triathlete, A+. I am one too. And you love podcasting, right? But outside of the hobbies, I want to take you into his background. He has a finance degree from Louisiana State University, also an MBA from LSU. He graduated in honors. And, he started his finance career right out of college. He spent about 5 years in the financial services industry, in investments and retirement and financial planning. And then he matriculated his way through corporate America, had a really impressive run in corporate America, got promoted 6 times in 7 years in the telecom industry, and then made a transition into real estate investing. Right now, he owns 44 units, a combination of duplexes, single family, and fourplexes. He just told me he closed on 12 units. And so really excited to have him on the show. He's going to be a great guest. And here's why I think this is really valuable, and I share the background with our audience to invite them into the conversation. It's because, success comes in different forms in real estate, right? I think oftentimes people have this fascination about buying 100 units, 200 units, and those opportunities are going to come. They are definitely going to come. But in my experience, okay, it's really about profits, right? Buying opportunities that are profitable, that are going to get you to your objectives. And so thanks for being on the show. I just wanted to give our audience that background. So tell me a little bit about yourself, man. How I appreciate the commentary around your background and the history, but how did you make the decision, or why did you make the decision? You had a very successful corporate career to transition out of corporate America into becoming a full-time real estate investor.
So the answer to that question is I never did fully transition. So I actually still have my corporate career, and but I would say that I'm also a full-time real estate investor. Awesome. So I'm blowing and going 900 miles an hour all day, every day. The reason I got into real estate was about 2 years ago. I just noticed in corporate America, they have a lot of restructurings and layoffs every year. And my boss, who had been with the company 17 years and had done a great job for all these years, he just out of the blue lost his job. And it kind of freaked me out. And I just envisioned myself being in my 40s with kids in private school and car notes and mortgages, and the corporate faucet just shutting off. And I said, well, I really need to figure out a plan B. Right. So my initial, so I started diving into the podcast and the books and read Rich Dad Poor Dad, and thought of, started kind of thinking differently. Right. I was raised in a college household, and I went to college, and I got my MBA, and in corporate America, my dad was a vice president of a big company, and it just, that was all I ever knew that was even possible. So when I kind of started to change the way I was thinking, I said, man, I could go buy some rentals, and then that would give me some cash flow. And then if by some crazy way I lost my job, I could still pay my bills and my family wouldn't go hungry. So I bought a couple single families that went well, and then I got a couple duplexes and that went well. Then I got a few more duplexes, and I got some fourplexes, and it's evolved into so much more. And you were mentioning the 100-unit deals, and I certainly, that's the direction I'm heading in. I have aspirations to syndicate large apartment complexes, but the smaller units are what would have gotten me, you know, all that I have and all that I needed up to this point. You know, the initial goal was to supplement my income or replace my income should, you know, I never had any desire to quit my job, but I was just afraid they might quit me. And, you know, I just wanted to be able to cover the bills. And it's just evolved along the way. You know, I had zero, construction background. I had zero real estate background. You know, I was good at numbers because I did have a finance background. And, you know, the first house I bought there was barely anything wrong with it. I just put a traditional down payment and, you know, I paid to have it painted and I wrote, okay, that's how much you have to pay to paint walls. And then I had the floors fixed and I found out, oh, that's how much you had to pay to fix floors. And then I bought it, you know, a couple months later, I bought another one and I had to replace an oven. And I was, oh, that's how much an oven costs. And every baby step I took made me more comfortable and more confident. And, you know, the next project I took on was some really beat up duplexes. One of them was flooded and gutted and the other one was just trashed by a tenant. And, you know, that was a $60,000 rehab. And, you know, I used other people's money to do it. I fixed it up. I went to the bank. I got it appraised. I pulled all my money back out, paid everybody off. And I had these, you know, $400,000 worth of assets cash flowing me $2,000 a month. And I didn't spend any money doing it. So that was when I was like, all right, well, I need to keep doing this. And every rehab I did, I got a little more confident. Everybody else got a little more confident in me because they'd seen me do it so many. You know, when I first started out, I told everybody, I'm going to go be a real estate investor. They're like, all right, well, good luck with that. But now everybody's like, hey, can I lend you some money? You know, can I invest with you? So it's been a great journey. I've fell in love with real estate along the way. My main focus now is on syndicating some larger apartment communities, but you know, I love these small multifamily units that have gotten me to where I don't lose sleep at night wondering about how I'm going to make the bill should have something happen to my job.
Yeah, you know, man, I think that's really great, right? Because you came into this with an end goal. You were really clear about what the objective was, and consequently, I think that's probably one of the reasons why you accelerated to that goal so quickly, right? That I call it an outcome. And your outcome was, hey, John, I want to make sure that if for some reason I lose my job, I have the financial stability through real estate to be able to do that, right? To cover my expenses. Because it's really interesting what you said. You love what you do, right? But if for some reason your company quit you, right, that you had another source of income coming in. So I think that's pretty telling, right? Because you came in with an objective, now you met this objective, and now you're starting to look bigger and beyond this. So
setting other goals going forward.
Goals, right? Well, you know, man, that's
goals over time.
Absolutely, that's a great segue. So talk to us a little bit about maybe some of the challenges that you first experienced, you know, when you were maybe in your fourth deal, right? So how did you improve along the way? Your strength obviously is in finance, okay? Because that's your background. I can sense that. But where did it start coming together? And you know, what are some challenges that you can share with our audience that would give them, you know, a better feel for not only the opportunity in this business if they stick to it, right? Like if you, every single amazing opportunity is going to have a challenge. Okay, nothing great in life is easy, man. That's why I love triathlon. Okay? It's finding a way to get to the finish line, right? Just find a way. That's what I say. Just find a way, man. So share with us some of the challenges that you went through, okay, and then how you came out the other side, because I think it's really important for people to understand that.
Sure. So, you know, there's been a lot of challenges along the way, and I think that's why more people don't do this. I think at the end of the day, perseverance is the winning ticket. You know, when that first house I bought, and I've told this story a few times. I don't know if my wife ever listened to these podcasts, but she's never confronted me about this. But the first house I bought, you know, I spent every dime I had saved to buy it. And like a week after we got it, there was like a $5,000 plumbing disaster that was hidden to me, you know. So I like put it on the credit card and just didn't even tell anybody. And that was major to me at the time.
Right.
But I went and bought another one, rather than paying off the credit card the next amount of money. I said I went and bought another one. And I actually just decided to kind of outgrow the problem. In fact, that same house that had that surprise $5,000 plumbing issue 2 years ago has another surprise $5,000 plumbing issue right now. Like, I got off the phone with the plumber an hour ago, and it's like, big deal, Whereas because I have so many properties bringing so much rent, now it's so absorbable. So,
Right.
I think what gets some people is they get one house or they get one duplex, and they calculate the ROI, and one disaster blows their ROI for the whole year. And when when you're not looking at it from a macro scale with economies of scale, it's very easy to get discouraged when you buy a rental and it makes you $300 a month, and in your first year you have a $6,000 problem, and that wipes out your whole profit, and you're running around showing the units and you're running around fixing them. It's easy to get discouraged and go, is it all worth it? I'm not making any money anyway. It's all the stress and the headache. But if you just push through and keep growing, now I have so much coming in that when these $5,000 problems pop up, it's not an issue, because it just gets averaged out with all the other properties that are profitable. And just getting through that and continuing to grow has been something that that has worked for me. Some other challenges is I tried to manage all of these properties myself, and when we talked about triathlons, I probably haven't run a triathlon in 2 years. Around the time I started real estate investing, I was actually training for a full Ironman. I'd done a couple of 70.3s, and my wife was pregnant, and I have a full-time job. And I was like, all right, well, I'm either going to, do this 140.6 and, take care of my wife and child, or I'm going to go into real estate. Like, I can't juggle all three of these things. So I postponed it. It's still on my list. I'll get there, but I decided to focus on real estate, and I'm very grateful for the decision that I made 2 years ago to do that. Sure. But just the journey along the way has just taught me so much every step of the way. The different challenges are, like I said, managing the properties. I don't manage any of the properties anymore. At one point I was training for a triathlon. I had a newborn baby. I was doing a podcast. I had a full-time job, and I was managing 28 properties. And I was just, I was about to burst. And I remember it wasn't that long ago, probably 3 months ago, I gave 18 of my properties over to property management, and it was the biggest relief. I don't know why I pushed it off for so long. I'm glad I went through it, because I learned a lot.
Right.
And I could probably more effectively manage the manager, having done everything myself. But I felt like I bought a shiny new car that day that I handed it over to property management. Like, that 10% is the best money I've ever spent. And then I went and closed on those 12 units yesterday. I didn't even go buy them. I drove straight from the title company to the property management company and dropped off the leases and the keys and walked away. It felt great.
Oh, that's classic, man. That's really great. Well, I really appreciate you sharing that. So you said something that really stood out to me, right? And that was, when I had this $5,000 problem, okay, I decided to outgrow the problem. And man, I love that, right? Because in some cases, we get into these situations where we run into challenges, and now you're faced with a decision that you're either going to shrink or you're going to produce through it, right? And grow. Well, you made a decision, man, to produce through it, and consequently now you're in a much better place. But talk about that a little bit, right? In the world of triathlons, we call it pushing through threshold, right? So in this case, you had an opportunity where you pushed through threshold, and now you've created a whole nother possibility for you, for your family. So can you talk our audience through the thought process behind that? What made you push through that threshold, right? Because oftentimes, man, I think, everybody, we all get faced with these situations where, when you're trying to create bigger opportunities in your life, we are going to run into challenge, right? But, I think the question is, how willing are we to push through threshold? So can you talk a little bit about that? Because I think it's a valuable lesson, man. You're going to unpack a valuable lesson inside of that conversation.
Yeah. So I think, and I say this all the time, I think, mindset is 90% of what we do, whether it's in triathlons, corporate America, or real estate investing. We have to have the proper mindset to push through and to kind of develop your mindset and get you in the right place. It all comes down to what you put in your mind, what you're watching, what you're listening to, what you're reading, and who you're hanging out with. So with real estate investing, I had like thousands of proof of concepts, right? Because this isn't some startup that I decided to do and just hope this crazy idea works. This is something that thousands of people have succeeded at over and over again. And having read all the books and listened to all the podcasts and heard all the success stories, I know it works. I mean, the proof there's I think more millionaires have been made in real estate than any other. And there's a million other statistics out there that just prove this is the right thing to do. Right. So when you get to that hiccup in the road and this, that kind of like fork in the road, it's like, well, what direction am I going to go? If you have a long-term vision, a long time horizon, it's going to be okay. And I was very fortunate because I had my corporate income. So when I would hit hiccups along the way, I could survive it.
Sure.
You hear some people, they get excited and they quit their job to go be real estate investors. I'm like, somebody was, and look, there's people who have done that are 100 times more successful than me.
Right.
And there is a lot to be said for people that will jump in with both feet and have all that dedication and determination. For me, it's been hard for me to, give up all that security. And
sure.
I have no doubt I would be 10 times more successful if I had all my attention dedicated to it. I'm just, not quite yet ready to make that jump yet, but it's been very beneficial to me. I can take more risk on the real estate side, knowing that I always have the safety blanket.
Right.
So
interesting. That's one of the things I love about this business, right? Sterling, is there's no one path. A buddy of mine, a little bit older than I am, said something to me many years ago, man, that I never forgot. He said, John, if you want to get wealthy, you cannot save your money. And it was very counterintuitive, right? Back then, it was very counterintuitive. But over time, I really began to understand what he was talking about.
Go broke investing.
Well, it's not go broke. What he was talking about was, you can't build wealth by just keeping your cash in a savings account that's typically earning less than 1%, right? That's really what he was saying. What he was trying to express to me was, you have to find ways to take excess cash and redeploy it so that it's actually producing for you and you not producing to generate cash, right? Sure. So once I really understood that, it completely made sense. And so you're kind of talking about that now, right? The path for me was not to go all in at this point, but I wanted to do it gradually because I have a job that I like. I'm getting paid really well. But now I'm at a point where I'm covering my costs, my expenses, I'm making money, and it's great. So my point is, there's so many different ways to the end result in this business. And it's going to look different for everybody. And man, you're a great example of that. So I really appreciate you providing that analogy. Okay, so I'm going to transition a little bit, okay?
Sure.
I'm going to transition a little bit to strategy, because I think it'll be really kind of neat to hear the strategy from you. So, you start off with single family, you went to duplexes, you started buying fourplexes. Now you just closed on a 12-unit property. So what is the strategy for you moving forward?
So I didn't just close on a 12-unit. I just closed on 2 fourplexes and 2 duplexes.
Got it.
It was a 12-unit package.
Got it.
But I've used a variety of really creative strategies. So the first the first two single family houses I bought, those were traditional. I went out and I put 15% down and, you know, they cash flowed $500 a month, and just, that's your Manila, you know, just investment rental property. But then I ran out of money. So I went and I found these really, they call it the BRRRR process. It's the same process that apartment syndicators have used to do value add plays on large apartment communities for years. But I found these beat up duplexes, and I can run through the numbers real quick to illustrate how the strategy, but I bought both the duplexes for $190. I borrowed all of the money. I had a friend who, at the time, nobody would lend me money. I didn't have any experience. So I had a friend who flipped houses, and he had investors funding his flipping. And I was like, look, I got these two duplexes under contract for $190. If you use your investors' money to close on them, fix them up, I can do a cash out refinance, and I'll pay you and your investors back, and I'll give you $50,000 on top of it. He was like, okay, that's a deal. So it took $60,000 to fix them up. They appraised at $390. We did an 80% cash out refinance. So I pulled $312,000 out, and I paid him back. I paid his investors back, and I gave him $50,000 for managing the rehab and bringing the money to the table and all that. And everybody, it was a win-win-win. Everybody was happy. And those properties are rented out for $4,600 a month between all four units. So I'm cash flowing $2,000 a month, and I have $80,000 in equity in them. And that transaction took a couple of months, and I just walked away, you know, with $80,000 in equity and $2,000 a month in cash flow with nothing out of my own pocket. Nice. Not doing any of the work.
And that's how you build wealth, right? Infinite return. So what was the lesson learned there in that experience? What was the biggest lesson learned?
The biggest lesson I learned in that experience was that I could do it myself. I didn't need to pay the $50,000. So the next projects I got, you know, now I kind of had a proof of concept to those around me. So I was able to get people to invest in my deals, and I realized I could just hire contractors. I didn't have to know anything about construction. You know, that deal, it proved something to everybody else, but it really proved something to myself. You know, I probably could have paid the contractors and found the money to do the deal, but a lot of it was just my insecurity, having never done a project that size, and right. Him having done a lot of rehab projects. It just made me feel warm and cozy, knowing that he thought it was a good deal too. And he, you know, he's done a bunch of fix ups, and he didn't see anything that really scared him off. So, but you know, I'm very grateful for all of his help with that deal. But, you know, now I just do it myself. I bring in the capital, I bring in the contractors, we fix it up, and we do the exact same thing. So we've done that several times. Several of my properties that I got, I actually bought on seller financing. That's another strategy. So I found an older gentleman who has had a large portfolio. He's been collecting over 30 years. He's looking to retire. He's been 1031ing his whole life, so he's got a huge tax liability if he liquidates everything. And, you know, he doesn't really have anything to do with the money if he liquidates everything. He just wants monthly cash flow to fund his retirement, you know, and keeping him below those huge tax rates. So, you know, I put 5 or 10% down, put 5 down on some of them, 10% down on others. And he seller financed them to me on a 30-year note at 6.5%. So, you know, he's out of the game. He's given up all the headaches, but all of his capital that he's been accumulating over all these years, he's still getting 6.5% of it throughout his retirement. So it worked out really well. I mean, I've got 20 something units from him doing that. And, those are basically the, you know, between the burn, the fixing up, using other people's money and doing cash out refinances, and the seller financing with low down payments. That's how I built up my entire portfolio. Going forward, my partner and I have a syndication model where we're pursuing, you know, raising capital to syndicate larger apartment communities and other areas. Sure.
So how did you find the investor with a large portfolio that was wanting to do a seller carry?
First of all, I just network constantly and talk to everybody I can. This is so much a people business. People always think that business is about numbers, but it's not. It's about people, you know, and I've got a a caveat on that subject is, some people think the best businessman is the harshest negotiator, but that's not the case at all. The best business people are the ones who take care of everybody they interact with. I've been in a hard-nosed negotiation where the guy got over me on $1,000. Yeah, he made an extra $1,000 on that deal, but I'll never do business with him again. Right. I try and make it a practice to pay everybody I interact with more than they ask for, so that they always want to do business with me. I pay them all. I pay my handyman more, so that they'll always answer the phone when I call. But as far as how I found him, he listed a property for sale on the MLS. I found it on realtor.com. I didn't want the property, but he said in the notes that he would be willing to do seller financing. So I called him and I went and sat down with him and had lunch with him. And it turns out he had a bunch of properties that I did want that he would also do seller financing on. So we had lunch a few times, and after a few months, we just worked out a deal. And I initially got a duplex from him and then a fourplex from him. And now every time he starts to unload more, I'm the first person he calls. So I've gotten, I think, 7 duplexes from him and 3 fourplexes from him. And, when he's ready to get rid of the rest of his portfolio, he's going to call me, and it's been great because it's in, I know your show and is very focused on improving our community. Right. So something that I've done is taken over the entire area. The portfolio was all in one area, and a lot of it was run down. He was older and couldn't keep up with all the maintenance. Hadn't painted the buildings in forever. Some of the stuff was rotted out. I went in and cleaned it all up, and I had so many properties on the same street that I actually brought up the street. Right. And then the other investors that owned other properties on the street saw, oh, well, maybe I should put some money into these houses, because now that Sterling, got all these other ones fixed up around me, and it just brings the whole neighborhood up.
Yeah, no.
On that topic, I bought another fourplex, and it was run by a property, very poorly run by a property manager, and 2 of the units were vacant and 2 of them were under rented, and one moved out right when I took over and the other was about to move out. And he said, yeah, we're going to move out at the end of the month. And there was a rot hole in their kitchen from where the toilet was leaking from above. It was a 2-story unit. And the first week I sent, everybody in there to fix it up and fixed everything in the unit perfect. A week later, I went by. I said, "So when were y'all planning on moving out?" He goes, "We're not leaving now." He said, "We've been begging the property manager to fix that for 8 months. We thought the roof was going to cave in. Now that you're taking care of the place, we don't have any reason to leave."
Isn't that amazing? So, this is why I love real estate, right? Especially commercial real estate, apartment buildings, because as entrepreneurs, we really get to create impact in different ways, right? But I think in real estate, especially with apartment buildings or multifamily properties, you really have an opportunity to really impact the community. And I think it's very rare where you actually get to live that out. But when you do, the impact is immediate. It can be immediate. And I don't think people realize that. Oftentimes we want to
get a bad rap.
Yeah, we want to find ways to make an impact. It's really not so much of a bad rap, but I think people deploying money into real estate, I don't think they realize that the impact that you can create inside of communities, when you make that investment. And so what you did was a perfect example, right? And I think the irony is, you take 44 units and you really think through the impact that you've been able to make around that 44 unit, and it's pretty substantial. It may not seem that way, but over the course of 10 years, constantly making investment and finding ways to improve how your tenants are living, it becomes pretty significant. So, you're improving the world, man. in your way, right? Your
right.
Your piece. So, I really appreciate you sharing that, and I appreciate you sharing the strategy moving forward. Talk to us a little bit about your syndication business. What is the model there, the strategy, why the transition now into syndications, and what do you hope to achieve with that?
Sure. So I got interested in syndication, I guess, late last year. I read Joe Fairless's book on the best ever apartment syndication book. And that was when I started my podcast, the Rent Roll Radio Show, and kind of wanted to start broadening. What I found was I was at the time I was still managing all of the properties, and it didn't seem like a scalable endeavor. And then also, you know, there's a lot of negative economic indicators. Like if you were to all the apartment syndicators, they'll give you the way that they analyze the markets they want to invest in. They'll look at the job diversity. They'll look at the, you know, whether population trends growing or declining, all that kind of stuff. And if you look into my market and run those numbers, it's like you know, that it's not the best place to invest. Now, I've had success investing here because I live here. I grew up here. I know which neighborhoods to go to, which ones to avoid. I can personally go take care of them. You know what I'm saying? But as far as buying a multi-million-dollar asset, you really want to set yourself up for success and put it in a market that's going in the right direction. And so I wanted to start looking outside. I wanted to invest in other areas. You know, I'm in South Louisiana. A hurricane could come through and wipe out my entire portfolio tomorrow. I want to be geographically diversified. I wanted kind of a more hands-off experience. Like I said, at the time I was trying to do everything myself. And I like the idea of buying an asset that where the economies of scale were so large that it could support like an on-site manager. It could support the infrastructure to independently operate to where I wasn't doing everything.
Right. Hey man, those are great points. Great points.
So I initially I was, you know, it kind of caught on what I was doing and people started wanting to invest with me. And I was like, okay, well, I'm going to go, you know, analyze some apartment complexes. And I never had time to do it. So my partner, actually, the way I met, he's in Utah. He posted an ad on Facebook and said, hey, our syndication group's looking for capital raisers. And I said, well, I could do that. So I reached out to him and I went and met with the group, and I didn't really like their model. They had like very limited returns going back to the investor, and they wanted a bigger piece of the pie, and it just wasn't what I was pursuing. I was willing to give up way more on the front end to build a long-term business. You know, I didn't need to make a bunch of money on the first deal. I'd be happy working for somebody else for free just to get involved, and you know.
Sure.
So I backed out, and then he called me. He goes, look, man, I agree with you. I want to do this long-term thing. I want to grow big. I don't need to make $1 million on the first deal. So him and I started, and he's got 26 years in the commercial banking experience. So he's great at underwriting. He's got a ton of broker relationships. And then I focus on kind of the capital raising side, and we're just, you know, we haven't closed. We've put a lot of LOIs out there, and hoping to get something under contract soon.
When you say a lot of LOIs out there, what markets are you focused on?
So we're primarily focused in like the Louisville to Lexington, Kentucky area. And then we really like Huntsville, Alabama, and some of the surrounding markets in Alabama. And then we were looking at Jacksonville, Florida, although we haven't spent as much time in Florida as we have in Alabama and Kentucky, just because I feel like there's so much competition there. And I really kind of wanted to focus our efforts. And not that there's not a lot of competition in Huntsville. Everybody knows about Huntsville, but we just kind of wanted to focus our efforts in those areas. My partner, Andrew, bro, he loves Alabama because he's the underwriter and he loves the low property taxes. We found some good deals in Texas, but the property tax ate them all up.
Well, you know, it's really interesting because it took me some time to get used to that as well, because I was initially investing in my backyard, which is San Diego, right? And property tax rate is pretty low, man. It's $1.25, 1.25% roughly on average, right? But then, yeah, you get into these tax-free states. Sure, you know, you don't have to pay income tax, but they're always making that up somehow, right? And so real estate is typically how that's done. So when you look at a lot of these markets like Florida, Nevada, Nevada's a little bit unique, but Texas, the home prices there are fairly low. And one of the drivers behind that is the high tax rate. But, an opportunity is an opportunity so long as you account for all the expense, right?
Sure.
And you really understand what the NOI looks like. So, it takes a little bit getting used to. I think the other side of that too is if you're in a market where you have a really good growth rate, right? Whether it be employment, people, usually there's a high correlation between the two. Your tax rate is often fairly low, right? Or at least when you're in a market where there's a lot of appreciation, rather. So considering those two things, and you look at the real estate tax rate, right, your mill rate, when it's fairly low, you have a greater propensity, man, for appreciation. So San Diego is a great example, right? LA, a lot of Southern California, the tax rates are fairly low, and with the high density there, and how the markets are growing, right? The population is growing. The propensity, man, for appreciation is very high.
Absolutely.
Because of that. So the point there being is, I can see that. I understand the logic behind it, and I think it's a good strategy. I don't know that market very well, but I understand the logic, right? I understand the logic. So really awesome, man. Well, hey, bud, we're at the end of the show. Sterling, I just want to thank you for being on the show. Really, man, you've given, I think, our audience a really, really great perspective, right? Because you're someone who's still maintaining a full-time job, right? Who actually you love what you do. Your mindset shift was, I don't want to be put in a situation where if I get let go, I don't have anything else to fall back on. So you created a goal, which was, I want to have enough income coming in, or if I lose my job, I can take care of all my expense. You set that objective, you hit the objective, right? Now you've outsourced your units to a property manager to manage. It's freed up space for you, giving you more capacity now to use your brain to now do this on a larger scale. So thank you for joining the show. I think it's amazing. Very, very great perspective. And man, I want to wish you continued success.
Thank you so much, John. I really appreciate you having me on.
Yeah, thank you, bud. All right, Sterling. So how do people get a hold of you?
Well, they can get a hold of me a number of ways. People think I'm crazy, but I give out my cell phone number. They could call me if they want to talk real estate, 225-247-5562. They can email me at sterling@crestworthcapital.com, or they can check out my podcast, The Rent Roll Radio Show, or hit me up on Facebook. I have a Sterling Chapman Facebook, a Rent Roll Radio Facebook, and a Rent Roll Radio Instagram as well.
Awesome. Well, hey, thanks again, bud, for being a great guest, for sharing, I think, some really good information, to our audience out there, and look forward to your continued success.
Awesome. Thanks for having me.
Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.